Live from Singapore, this is Insight with Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Canada's Liberal Party wins a fourth consecutive election, giving a mandate to former central banker Mark Carney's pledges to boost economic growth and stand up to President Trump. A glimmer of hope for automakers, with President Trump saying he'll be on track to lift some tariffs on foreign-made parts. We'll assess the impact of another policy walkback with Dunne Insight CEO Michael Dunne. And for more on trade, we have an exclusive interview with Italy's Deputy Minister of Enterprises on the risk to his country's $76 billion export market with the U.S. Welcome to Insight. Canada's Liberal Party has won a fourth consecutive election, a stunning turnaround for Prime Minister Mark Carney, who campaigned hard on standing up to President Trump's trade war and threats to make Canada the 51st U.S. state. For the latest, let's head to Ottawa, where Bloomberg's David Gura is with us. David, of course, this is a pivotal moment for Canada. Talk to us about what Canadians voted for.
This is a moment that was inconceivable just a few short months ago when Justin Trudeau was in the end of his 10-year-long prime ministership here in Canada. There was widespread dissatisfaction with the direction of this country, with the economy. Justin Trudeau represented that, and the Liberal Party represented that. And then we saw this change where Mark Carney won that Liberal leadership election and Donald Trump returned to the White House in Washington, and that changed everything. It changed the entire dialogue around the political landscape here in Canada. So yes, it continued to be about the state of the Canadian economy, about debts and deficits and a housing shortage in this country. But what was really resonant were the threats from Donald Trump that came over and over again about that long-standing economic and trade relationship between the U.S. and Canada and how Donald Trump wants to alter that. But also about Canadian sovereignty, and what started as what seemed like a joke on the president's part, saying he wanted to assume Canada as the 51st state, happened over and over and over again, and that joke fell flat. And Mark Carney, who's projected to be the winner of this election now, is someone who said over again that he never thought that that was a joke, thought it was funny. He took Donald Trump at his word when he said that, and so that was something that provided the grist for his candidacy and really changed the tenor and the contour of this campaign. It was something that Mark Carney talked an awful lot about, the kind of magnitude of that threat from the United States. And we saw his closest rival, the Conservative leader, Pierre Poilievre, having to talk about it as well. And so fundamentally what voters here were choosing between were two candidates who offered differing views of how they plan to approach what will be an incredibly important meeting when it takes place between the Canadian Prime Minister and the President of the United States, dealing again with those two issues, the economic relationship between these two countries and where that's headed, and also the sovereignty of this country, Haslinda.
Well, David, the big question is, how will Carney govern? You talk about all the challenges, a political landscape upended by Trump. We have energy security top of mind. The economy as a whole needs a boost as well. How will Carney do it?
Through a lot of fiscal spending. And so you look at the programs that he's proposed. Yes, there's a small tax cut that he's proposed for the lowest income bracket in this country, but he also wants to put a tremendous amount of money toward building housing in this country. He talks about it as a generational challenge, the need to invest a lot of money in building those houses and training the workforce to build those houses as well. Now, you ask about the challenges of his governance here. CTV is projecting now that he'll have a minority government. Now, this is not without precedent. There have been prime ministers who have governed with a minority in the past, but it makes the road that he has to hoe a lot more difficult. He'll have to work with some of the smaller parties that were in this election. So that could be the New Democratic Party or the Green Party, the Bloc Québécois, none of whom picked up a significant amount of seats here, but he will need them if, in fact, that's how this election turns out in the end. So that'll be a fascinating thing to watch here, how somebody who is a technocrat by career. Mark Carney has never been an elected politician before. He did win his riding or his district tonight in this election, is going to go about doing that kind of political maneuvering that it's going to take here to govern this country going forward. It'll be fascinating to watch.
David, great insights. Bloomberg's David Gura in Ottawa. Thank you so much for that. Let's dive deeper into the election result and its international implications. Vina Nadjibulla is Vice President of Research and Strategy at the Asia Pacific Foundation of Canada. It provides policy advice and business intelligence on Canada-Asia relations. Vina, good to have you with us. We heard just from David earlier on about how just a few weeks ago it was unthinkable that Carney would get that mandate. Was it a surprise to you?
Good evening, Haslinda from Vancouver. Absolutely. This is a stunning result. Nobody would have expected this just 2 months ago. A fourth mandate for the Liberal Party, and Mark Carney looks like he will continue to be the Prime Minister of Canada tomorrow as well. This is very much a result that's shaped by President Trump. Tariffs, trade war, and his threats on Canada's sovereignty and independence were the defining issue in this election, and Canadians have resoundingly said no to that and yes to Mark Carney.
Well, the big question is really how stable this government, his government, would be. What's your take on that? Because there are huge implications on businesses, on how the economy goes forward.
Absolutely. So we're still waiting to see whether he gets a minority. That is the projection. There's still a slight possibility that he'll end up with a majority government. In a minority government, things are going to be a little bit more difficult. He's going to have to negotiate. National unity questions will be concerned. The platform that the Liberals put forward calls for big deficits, but also huge investments, as well as industrial policy. So I think a lot will depend on the first few weeks, how he positions himself with respect to negotiating with the U.S., what those discussions will be like, how he engages with other partners. Remember, Canada is the president of the G7. There's already been outreach to the Europeans and key partners in Asia as well. So I think Mark Carney government will have to deliver some early wins, and the G20 offers him a big opportunity on the leadership in terms of global leadership.
Well, the thing is, Carney doesn't have the political experience. If he inherits a minority government, what are the chances that he will steer Canada the way he needs to?
I mean, it's difficult to predict. Of course, he'll have to work with others. The NDP, which is another progressive party, as well as the Bloc Québécois, will likely be his natural partners. I think a lot will depend on what some of the early discussions with the U.S. in particular will be. That is the defining relationship for Canada, the most important, consequential relationship for us. If there are some early wins, or at least if there's no escalation in the trade war, I think that will create some breathing room. A key priority also for Prime Minister will be national unity and working on free trade within Canada. So all the policies in making Canada more resilient, because while we can't control external environment, what the US or China does, Canada can control what we can do here in the country. And I think if that becomes the focus, then there is a chance that there will be more support from other parties as well.
Vina, how much room is there for Carney, for Canada, to continue to play hardball with the U.S.?
I think we're seeing that there's a lot of pushback in the U.S. For the policies that President Trump is promoting. And that has been the strategy for many Canadian actors, to raise the cost, to put a price, and to create pressure essentially from business, from consumers, from other interest groups on President Trump. And we're seeing that. 100 days into his presidency, President Trump is facing very low numbers, crashing stock market, and lots of pressures from various industries, auto sector being the latest one. So I think the hope is that as the costs and the policy impact of President Trump goes up, that there will be room for Canada to maneuver.
Given the tense relations between Canada and the U.S., some are suggesting that the Indo-Pacific region would be key to Canada's prosperity. How clear are we in terms of Canada's strategy towards Asia? Because there's been a lot of skepticism. We know that previous governments have come to woo the region, but they've not really been successful in gaining the trust of its commitment to the region.
Absolutely. Canada, like many others, has tried to pivot to the Indo-Pacific region. We have an Indo-Pacific strategy that has been in place for 2 years, and there certainly has been an effort to deepen strategic partnerships with a number of actors, Japan, South Korea, ASEAN countries. We have a difficult relationship with India and a difficult one with China. I think for Canada to have any chance of reducing its over-reliance on the U.S., it has to do more in the Indo-Pacific. Our economies are complementary. Canada is a big exporter of energy, energy, of food. The region wants that. There are many opportunities also when it comes to climate and technology and AI and other areas as well. So I think there's definitely appetite on the part of Canada to do more. I think the moment now is ripe as those economies are also looking for other markets and reducing their over-reliance on the US. So this is the moment for Canada to deepen relations. The issue is going to be bandwidth. Will Canadian stakeholders, particularly in Ottawa, will the minority government have the bandwidth to engage with Asia as they try to negotiate relations with Trump?
Vina, it is a fine balance. Even as Canada talks about engaging more with China, China is a key issue in its trade negotiations with the U.S.
Absolutely. We've already seen that the U.S. is putting the issue of China on the table when it's negotiating with Japan, Vietnam, or others, and we expect the same will be true for Canada. Canada is already facing tariffs from China, which China put in place in response to Canadian tariffs on Chinese-made EVs. So we're in a trade war with China already, and I think we'll see pressure from the U.S. to align more closely with the U.S. policies on China. So Canadian policymakers will have to resist that and try to have a made-in-Canada China policy that serves our interests and best ensures Canada's prosperity and security moving forward.
So it is complicated, just as it is complicated when it comes to relations with India. How do you see that playing out? Because under Trudeau, that relationship just, I guess, kept going lower and lower.
Absolutely. We've had a diplomatic crisis with India for the last 18 months. I'm a little bit more optimistic about a possibility of a reset between Canada and India. I think we're hearing that, and certainly Prime Minister Carney said that even just a few days ago on the campaign trail, that he believes Canada-India relations can be rebuilt. It will be difficult because there are some serious issues. Canada needs accountability and justice for the allegations with respect to India's actions, transnational repression here, foreign interference. So there are some serious issues that need to be addressed. But there is desire, I think, both in Ottawa and New Delhi to try to find a roadmap for moving forward.
Looking for common ground. Vina, thank you so much for your perspective today. Vina Nadjibulla from the Asia Pac Foundation of Canada. And of course, our subscribers can turn to the terminal for more on this. T-Live Go is your function for live updates. Plus, you have commentary analysis from Bloomberg's expert editors. Well, still ahead on Inside, President Trump looks set to ease auto levies while China is rallying countries to stand up to U.S. tariffs. Morgan Stanley Investment Management will be joining us next with their market outlook amid the trade uncertainty. Keep it here with us. This is Bloomberg. Well, some reprieve in the market. As you can see on your screen, the MSCI Asia Pac Index currently up by about a modest 0.5% right now. U.S. equity futures also gaining on expectations that President Donald Trump is on track to ease the impact of his auto tariffs. Though, take a look where we are in terms of the CSI 300 index, down about 0.1%. In terms of the Chinese yuan, it's trading at 72.76 versus the USD. It is up by about 0.1%. Trump considering those softening of those auto tariffs, giving some reprieve to markets here in Asia as well as U.S. futures. Japan, by the way, is on holiday. Well, let's talk markets and more. Jitania Kandhari, Deputy CIO at Morgan Stanley Investment Management Solutions and Multi-Asset Group, joins us now. Jitania, your take on how sustainable the muted gains we're seeing is right now?
I think it's going to be a question of how the trade negotiations pan out. So from what we are hearing, there is a lot going on tariffs, non-tariff barriers, subsidies, currency. So it's all about negotiating not just tariff barriers, but non-tariff barriers, etc. I think countries like India and maybe Korea are pretty close to advanced negotiations, and I think that should be positive. I do think that the conversation is shifting towards more sectoral tariffs because this country-level tariffs has not been the right strategy. It's been an overwhelming strategy for the opponents here, and there is going to be a shift in terms of thinking about sectors, which is Section 232 with semis and chips and lumber, etc., and autos now. Overall, I think the news flow gets slightly more better from here, but on the long-term impact, I think we are still watching what that means for economic growth and inflation.
The thing is, Jitania, the trade war is still missing in the data, not reflected just yet. How complicated is it for investors?
It is complicated because the hard data has been slowing, but just like it was supposed to. We were expecting even before these tariffs, U.S. growth to slow down from last year's levels, not significantly, but marginally. So that is happening, but the soft data is beginning to show concerns, and it's going to be a wait and watch game because the inflation data can probably show up stronger first before the economic data starts slowing down. So it's going to be a wait and watch game. The indirect impacts with uncertainty weighing on businesses, weighing on consumers, is what is being reflected in some of the soft data and the expectations there. And it's going to become critical to watch that as we head into the next couple of quarters.
You've talked about how the tariffs will hurt the U.S. more than China. Is this already being reflected in the flows?
Yeah, I think there was an interesting OECD study that was done that the tariff impact on U.S. is going to be more of a supply shock versus the rest of the world, which is going to be a demand shock. If the tariffs remain at these levels, what does that mean? So when you are on the demand side, you can address it with monetary and fiscal policy. And several pockets of the world have the fiscal space, the fiscal ability, the monetary policy impulses that can help offset some of that. Whereas in the US, that is constrained. So I think that is beginning to get at least mentioned and talked about. I mean, we saw some selling from the Japanese. A lot of the data flows we are watching. There's been a lot of movement into Europe. So there is an overall questioning of the U.S. exceptionalism that has driven U.S. markets over the last 14 years relative to the rest of the world. And there is interest emerging outside the U.S. on account of the correlation that we've seen across U.S. assets when the panic struck in the markets a few weeks ago.
So having said that, Jitania, I'm just wondering how your global portfolio allocations should be looking like.
You know, when the dust settles, what do you want to really own? 65% of the all-country world index for global investors is in the U.S. The last time U.S. was at these levels, it was in the 1970s when the U.S. Share in the overall market cap was 65%, and then it came off. In the 1970s, you had the two oil crisis. It's a different situation here. The question on the dollar and where that's headed is very, very critical to the international investors because currencies are a big contributor to international returns. So definitely pockets of Europe with the stimulus, with all the spending that's going to happen there, with the deleveraging that has happened in the peripheral parts of Europe. Japan, pockets of Japan that benefit from the currency because currency is an important factor there. Other regions like India that seem more resilient in the face of these tariffs are looking interesting. So several opportunities across the international space at much lower multiples. And also, it seems, as I mentioned, the fiscal and monetary side of the international markets is looking much more compelling compared to the US, where both fiscal and monetary policy are constrained at this point.
When it comes to Japan, Jitania, you'd imagine that the yen is a big determinant for investors. I mean, what are you making of the positioning in the currency? Is it overextended? Is it not?
Yes, there is a short term on the yen and the long term. I think the recent data on the positioning in the yen looks very extreme. So I wouldn't be surprised if there's a counter trend rally in the dollar, because it seems to have moved from technical perspective pretty aggressively, and the yen has been one of the beneficiaries. Also, what is really important in Japan is the way the yen impacts the economy and the markets, right? So because Japan is an importer, the weakness in the yen historically hasn't been great for the economy, but it's been great for the markets because of the export orientation of that market. So I think you can have these shifts in intra-sector movements in Japan on account of this. Longer term, we still like the yen, and we are long the yen and positioned for that. But I do think that the short-term positioning looks very, very extreme.
For a very long time, we've been talking about capital repatriation as more and more investors look at Japan. It's become really attractive. How are you assessing that prospects? What are we seeing right now in terms of capital repatriation back to Japan?
Yeah, so there are two parts of this. One is, of course, the FDI, the foreign direct investment, which also Japan has been sending a lot of FDI outside. And the portfolio flows, which are, the debt and equity flows. I mean, for the first time, you have inflation and higher yields. So I do think that on the portfolio side, the flows will return. Some of it has already happened, and given all the reforms initiated there in the markets, that should be a good source for capital coming back. On the FDI, I'm not yet convinced on what happens on those flows, because Japan is also very intertwined in the supply chain across electronics, across autos, across the semi-equipment space. So we have to see that. On the portfolio side, I do feel like there is going to be some flight back into the country.
Jitania, just one final question before we let you go. What's the biggest factor that will shape investors' thinking in the coming months?
I think the credibility of the US dollar is very important for allocations within and outside the US. I mean, of course, growth has been the big factor driving US, because we had the biggest fiscal stimulus post-COVID, and that really kept rates up, kept markets up, kept growth up, kept currency up in the US, and that's inflecting. But I think at this point, just the whole credibility in the international space, with interference in the central bank, in institutions, with these valuations of the currencies anyways being extended, and with the net international position in the US being so negative, i.e. foreigners own more of the US assets than the other way around, and how much of that will continue to come in is the key question. So I think the whole credibility and the dollar are going to be very critical to that thinking.
Jitania, thank you so much for that. Jitania Kandhari, Deputy CIO, Solutions and Multi-Asset Group at Morgan Stanley Investment Management. Thank you so much for that. Still to come, Italy's Deputy Enterprises Minister will be joining us for a discussion on trade tariffs and deepening relations between Italy and Asia. That is an exclusive. Keep it here with us. This is Bloomberg.
Negotiations are ongoing. Also, last week I was meeting Scott Bessent in Washington, and we were also touching upon these issues. But I would say there is also still lots of ground to cover.
And that was European Economy Commissioner Valdis Dombrovskis giving an update on trade talks between the EU and the US. Now, Italian Prime Minister Giorgia Meloni recently became the first European leader to visit the US since President Trump announced a new tariff regime on trading partners that includes a 20% levy on imports from the EU. Trump said during the meeting that he expects to reach a trade deal with the EU, but indicated he is in no hurry to finalize an agreement. Let's get more with the Italian Deputy Minister of Enterprises and Made in Italy. Valentino Valentini joins us exclusively here in the Singapore studio. Minister, good to have you with us. How optimistic are you about getting a deal with the US?
I'm a realist, and I'm also one of the few people who read the art of the deal. And if you go through the art of the deal, you see that the position of President Trump most of the time is to go out shocking your opposite number with a very strong opening position and then finding a deal. I hope and I think this is the situation. It's probably, as things develop, you see that from a very strong initial position, negotiations are developing, and I am confident we'll come to an agreement.
We know that Italy has been quite resistant in taking the stance, the hard stance, that the rest of the EU is adopting in countering US tariffs. In the end, though, does Italy have to fall in line with the rest of the EU? Will there be, one coordinated response to the US?
I think we have to cut the noise to go to the signal. If you look at Europe, no position was taken yet. You heard Dombrovskis, who said we have to talk and negotiate. Position of Giorgia Meloni. Keep cool, keep your nerves, avoid a verbal escalation, and let's negotiate. But first of all, let's avoid breaking up the relationship with America. Keep the West united and try to find an agreement. It's not that Giorgia Meloni has said was against the others, but rather she's talking sense into the others, and the position is going to be united. Both because of the European legislation, the fact that European countries have delegated to the European Union foreign economic policy, but also because intrinsically that's what the position of Italy is, and I think everybody with different shades of grey is taking the same position.
A huge debate right now about whether or not to hit the US on its services. If it fails to roll back the tariffs, where does Italy stand on that?
There too, I think that we have to prevent, in a situation like this, you can start raising the stakes. But if you start to raise barriers, first of all, it's very hard to lower them afterwards. Secondly, no one's the winner. I've never seen anybody win a trade war, and we don't want to enter a trade war. Of course, there are sensitive areas to the United States as well, but I think we have to avoid going to that side and rather talk about ways of compromise. The position is we are in favor of net zero tariffs. That's our position. Hopefully we'll go there, or probably, if I were to make a forecast, but it's a very risky business, both in terms of investments and in terms of politics. I think we'll probably go to a lower minimum tariff. The impression I have is that the United States is seeking to have a source of income. The United States has spoken about tariffs not as a regulatory mean for trade, but rather as a source of income. And if that is the point, I think the United States will go towards an average 10%, 7%. We'll see where we're going to fall down.
Even as you talk about finding ways for a compromise, isn't it also important to stand up to a bully? We heard from China's Wang Yi saying that the US is a bully and you have to stand up to it. I mean, however you feel about China, for instance, that is quite the reflection of a lot of countries.
And see, your instinct would be that of standing up to a bully with the same attitude if you feel you've been bullied. Our position is, let's try to understand what the other side's position is, what are the real reasons behind the attitude, and address those points. Maybe I I should recommend another book. Never Split the Difference would be the book.
That's two books already today.
Yeah, okay, but you know, Bloomberg is, as you know, I'm in a conflict of interest. I've been a member of Bloomberg probably for, I don't know, for how long. You know, I live on this. For me to be being on Bloomberg and following Bloomberg, it's somewhat strange. But since I hold Bloomberg in very high esteem, I have no point in quoting two books. Never Split the Difference is a way of negotiating in a very empathic way, and that's where the Italians are, and I hope that's the way we have to go. I can understand how the reaction could be, oh, that's the bullying. I think our position is, let's keep calm, try to address the problems, if there are any problems, let's try to solve them, because, as I said, no one is going to win a trade war, and we're already seeing that. The markets tell you that. The repercussions, the ripple effect of what's happening is there. And for the moment being, even a verbal skirmish, even a verbal escalation is already provoking a lot of damage, because we here on the economic news channel, well, you sell on the rumors and buy on the news. We have to be careful that the rumors is just as important in the news.
You say keep calm, but the enterprises, the companies in Italy are not keeping calm. In fact, they're up in arms. They say that they'll be greatly impacted by the tariffs. Can you quantify what the numbers that you're looking at right now in terms of the impact on the companies in the country?
It's hard to quantify because Italian companies tend to be within all supply chains. And what really is going to affect Italian companies is the disruption of supply chains, which are nowadays global. You know perfectly well, nowadays when you come to a manufacturing product, Italy is the second largest manufacturing country in Europe. I have to remind that because Italy is always seen as the three Fs: fashion, food, and furniture.
Pharmaceuticals even.
But we are number one in pharmaceutical, we are number one in packaging, we have fantastic manufacturing, automation, and we, Italian companies, tend to be in the middle of the supply chains most of the time during this customized way of solving problems. And of course, we're going to be impacted sometimes twice as much. So it's very hard to quantify what the effect is going to be, because
why not though? Because you've managed.
No, but the other point where we can quantify what the impact is would be on the Italian goods, on, for example, the agri-food business, where we're number one. Of course, most of the time, alcohol product, wine is going to be impacted. The Italian products also. Remember, another effort we're making is to have other countries respect what we call the respect of Italian products, because we have the attack of Italian sounding products on ourselves. If all of a sudden our relations are afraid, of course you will have less protection of your products. That's why I said it's hard to measure. It's easy to measure when the tariffs hit certain goods, and agri-food for certain. It's very hard to see when the whole of when the tide go down, all the boats go down. That's what you usually say when you do investing. Same go for industry.
We've talked about how the tariffs have not yet been reflected in economic data. That will come later. Might Italy have to rethink its already reduced growth target on the back of that?
There are estimates that will reduce the growth target because, as I said, when the tide goes down, all the boat go down. And I have to correct you there, that we already feel an impact. The impact is the fact that all investments are stopped. The whole economic activity is stalled all over the world, and you can see it very well. So, and companies can no longer wait. If you have, in terms of investment, in terms of be it material investment, be it investment in the stock market, in the equity market, every day you have to take position and you cannot stay back. But what's holding back is investment. If you do not invest, you do not buy. If you do not build, you do not sell, and the whole economic activity goes down. That's why the projection gives you 0.2% less in terms of growth. Of course, that's the macro you can estimate. What the impact is going to be, it's much harder. So that's why we're very careful not to get into a trade war, not to get into a verbal war, which is already just as hard, just as bad, because the decisions are taken beforehand. And that's why we try to talk to both sides. To Europe, we take the European position, we take a stance, we're ready to go hard if needs be, but we want to prevent that.
The US, 10% of your exports. When you take a look at the alternatives to the US market, I mean, Asia, comes to mind. How are you deepening that relationship? Where do you see opportunities? How do you go about engaging with this part of the world?
Well, in my case, you push an open door. I always felt that, and I've been here, it's not the first time we meet, it's not the first time here. I think there, for several reasons. A, because of our trade links. B, because of the interconnections of our economy. Sometimes it can be a market where you can sell your goods or where you can source your products. 3, I think that the whole situation, though, the net effect is already going to be a rewiring of global trade. And of course, Europe and Italy and Singapore, the ASEAN region and the Asia region need to deepen their relations. We need to create new networks because we don't know how the new rewiring is going to be, but one thing's for sure, we are bound to increase our trade. We're bound to increase our economic relations.
How much? I mean, is there a time frame? What are you looking at? Is there an estimate? Like you said, we're Bloomberg, we love numbers.
I know. I wish I were able to give you numbers in this case, but for the time being, we're very happy. We had an investment, a very important investment. We're happy with the 3 billion investment that's going to be made by Silicon Box, a company from Singapore, into the Italian economy. I'm not able to put numbers. I don't like to make numbers when I'm not sure what I'm talking about. But one thing I can tell you, we'll have more and more politicians. We're organizing both on the business level and the family level. We're already talking in between the family businesses because mostly Asia, it's family business. Europe and Italy in particular is made of small and medium-sized company and family-run companies. And a family-run company is totally different. Why is it different? Because it looks for value over profit. It thinks about long-term and thinks about the prosperity and different values.
Minister, we're talking about a challenging environment. Add to that now, we have that, outage in Spain, something unforeseen, a state of emergency has been called. How worrying is this? Because it's not just Spain right now. We have Portugal and parts of France also experiencing the same thing.
It's very worrying. Made me think of a series that I recently saw on Netflix where there was a power outage and it was created by, I hope it's not an outside intervention. I hope it's a black swan. It's a one-off situation that we have to look into anyhow, be it, God forbid, be it an external intervention or rather a failure of the system. We have to look at it because it shows, on the one hand, how interconnected we are, how powerful we are, and how fragile we are at the same time. So we have to look at it, and especially in this side of the world and our side of the world, events, unforeseen events, be there, for example, environmental effects or weather effects. We've seen storms that can happen and can disrupt our economy, and we have to think that, for example, this part of the world and Europe at the same time, we don't have to lose sight of the need of going towards a green and digital transition, which we see as an opportunity and we see as a moral duty to the future generations and our generations.
Is Italy taking steps to perhaps position itself to counter a possible?
No, well, we do use, for example, in this case, satellites and AI is used for predictive models. So of course, a black swan is a black swan. It's something that's very hard to predict. It's something that falls outside of all statistics are based on probability. But if the event is 0 probability, if you're off the tail, at the end of the tail, you cannot prevent it. But you certainly have to do things. A, establish a network and of monitoring. 2, everything in economics and in our infrastructure has to be doubled up. We came from a streamlining. I'm borrowing someone else's quote, but I find it very, very effective. Right. From just in time, we have to do just in case. And that's a case of just in case involves redundancy. Redundancy in your structures, redundancy if you can't use. In every household, at least in Italy, it's normal to have candles because if the light goes out, you turn on the candles. Well, it's hard to power an economy on candles, but certainly we have to think of a lot of ways of intervening and not to be too integrated.
Minister, great insights. Thank you so much for joining us today. Valentino Valentini, Italian Deputy Minister of Enterprises. And still ahead this hour, Dunne Insights will be joining us with an outlook for the auto trade after signs President Trump may walk back some tariffs. CEO Michael Dunne joins us next. This is Bloomberg. Welcome back to Insight. President Trump is said to be on track to ease the impact of his auto tariffs. We're told he's considering changes sought by the industry that would lift some levies on foreign parts for cars and trucks. A White House official says imported automobiles also would be given a reprieve from separate tariffs on aluminum and steel to prevent multiple levies from stacking on top of each other. Well, joining us for Insight, Michael Dunne, CEO at Dunne Insights. Michael, I mean, this looks like an olive branch is positive news for the auto industry.
Absolutely. When I think about his approach to tariffs as being President Trump, think of three chapters. Chapter one, a giant shove, a violent one at everybody at the same time. Why? To get attention. Chapter two, we're entering it right now. He's going to relax tariffs on friends and family. Chapter three, this is all a setup for a showdown with the number one competitor adversary, and that is China. So we're moving into the second phase where I see more and more relaxation with friends, Mexico, Canada, Europe, Japan, and Korea.
But reprieve for U.S. automakers to start with, right? That is the most important thing. I mean, prior to this announcement, people were talking about how the cost of cars could rise as much as $10,000. We talk about job losses, manufacturing getting cut. I mean, how much of a reprieve is this really?
He's totally aware of what the shock has been, and he doesn't want to penalize U.S. consumers. He wants more manufacturing in the United States. So if we step back for a moment, however, Haslinda, think about this for a moment. You said moments ago that Bloomberg likes numbers. How about these numbers? Last year, the United States imported 8 million cars. China imported 700,000. About 3% of the total market in China were imports. About 48% were here in the United States. Similar stories in Japan and Korea in terms of protectionism. So to some extent, President Trump is saying, hey, we've been so open compared to other markets for too long. That's got to end. We have to have a reset. And that's the hard and sometimes violent process we're going through right now. But it's a necessary one because things have been so lopsided for so long.
Michael, even as we talk about Trump possibly easing tariffs on autos, he did indicate it. He might increase Canadian auto tariffs, and part of the reason is to ensure that the U.S. makes its own cars. How are you assessing that, and how feasible is that really?
Within the auto industry, it's widely known that Canada has some of the highest costs of manufacturing in the world. So to some extent, that manufacturing would be more efficient if we're brought back to the United States. Canadians won't like to hear that. It's unpleasant news, but it is a reality. If the United States is going to become more competitive globally, we need to relearn how to manufacture our own cars at home with world-class supply chains. That hasn't been the case. We've been importing from Canada, from Mexico, from Japan, from Korea, from Europe, and we really have lost our manufacturing backbone. This tariff exercise is really meant to drive world-class manufacturing back into the United States.
Michael, as we talk about cars and production, I want to talk about the increasing competition in the EV space. By that, I mean BYD and Tesla. And from the recent earnings that we've seen, Tesla is losing ground while BYD continues to soar. What are you making about the competition between the two? I know you've indicated how a comparison between the two is in fact a comparison between oranges and apples, and it's not a fair comparison.
Right, it's sort of like, since I lived so many years in Asia, it's like durians and mangoes, if you will. They're just not the same. But you know, BYD brings what? They're very low-cost, high-scale manufacturer, vertical integration. They're the most efficient EV producers in the world. Elon Musk looks at BYD and other Chinese competitors and says, I don't want to try to compete on cost against the Chinese. I won't win that war. So instead, he's moved his goalposts and saying the future is AI and robotics. They will differentiate Tesla by being the best autonomous driving vehicle in the world. He envisions fleets of robo-taxis, self-driving cars in the United States, in Europe, and in China. Let BYD win EVs, especially at the lower price points. He doesn't want to fight that war. He's moving on to AI and robotics.
As we talk about how Tesla is losing ground, we heard from Elon Musk saying that, you know what, he's going to maybe pull back from his responsibilities with Doge to concentrate on his company. Is that a game changer for Tesla?
It is. Elon Musk is Tesla and Tesla is Elon Musk. So if tomorrow, for whatever reason, Elon Musk were to say, I'm stepping aside from Tesla, that would be pretty much a disaster for shareholders. So huge sigh of relief among shareholders. Elon's coming back to drive this next generation of Tesla growth, not just with autonomous cars, but also with humanoids. So keep in mind, AI robotics is what Tesla is evolving into, whereas they're no longer just an EV company.
I guess the big question is whether Tesla shares can recover to the levels, it once was at, given the spiral down we saw in recent months.
It's what do we say here in Silicon Valley is, Elon Musk's comfort zone is right on the edge, always taking the biggest risks. But everyone I've met in the last 10 years here in California says the same thing. Never bet against Elon Musk. And I think that's sound advice. He seems to find a way, even when things look really tough.
How crucial is the India market to Tesla right now? We know that that's possibly looming. India has said yes to Tesla, but no to BYD.
You're right. That's highly significant. So what are we seeing? Just as Apple is moving production to India, Tesla is hoping to diversify away from its overdependence on China. Today, Haslinda, Tesla produces half of all of its vehicles inside China. China accounts for 1/3 of its global sales. Elon understands the risks, and he'd love to move some of that production over to India, low-cost manufacturing, and use that as an export hub. So strategically, India looms very large for Tesla, not so much the Indian market, but as a manufacturing base for exports to third markets globally.
Michael, in 20 seconds, do you see India perhaps allowing BYD to find a local partner? I mean, what would it take for India to allow that to happen?
Wow. They'll be very demanding. They understand that BYD, if it were inside India, could overwhelm and compete and overwhelm many Indian manufacturers. So I don't see it happening in the foreseeable future. BYD will have to find growth elsewhere. There's plenty of other places BYD is doing well. Australia, Southeast Asia, South America. I was just in Mexico last week. They're pouring in there. So they'll work where they can and return to India when there's a green light. Not now.
That's still not stopping BYD from having its own India ambitions. Michael, great to have you with us. Michael Dunne, CEO at Dunne Insights. Of course, we're counting down to those HSBC earnings. Let's do a check on how the stocks are doing at this point in time. Currently under pressure. HSBC reporting first quarter earnings in a few minutes. That is it for Insight. Keep it here with us. This is Bloomberg.